Hi, I'm Michael Yardney. You only have to open any newspaper or turn on the radio to know that many parts of Australia are experiencing a property boom, with prices of many properties increasing significantly, well above their long-term trends. Now, one of the lessons to come out of the last few years is that property downturns never last, but I guess we also know that neither do property booms. So how can an investor make the most of this new property boom, which on past records is only going to last a few years? In fact, I know some commentators who don't even think it's going to last that long. Now, the answer is simple. Smart property investors will take advantage of this cycle to build their asset base. They're going to use the same investment strategy that has worked well for most successful property investors in the past, and that's to invest in real estate for long-term capital growth. Based on past performance, and there's no reason to think it's going to be any different this cycle, strong capital growth will always occur in our major capital cities, with median prices increasing on average by around, 10% per annum over the next 10 years or so. Now, I know every time I say this, a whole group of readers are going to disagree, bringing up counter-arguments such as, no, Michael, this can't happen, property prices can't just keep going up, or we're in a property bubble, property prices are going to drop like overseas, or things like, what about affordability? Why am I so certain that capital city property prices are going to keep increasing? Well, it's all to do with the value of land, which is really related to supply and demand for that land. Now, I remember John Edwards from Residex, who explained it really well in an article I read many years ago. It went something like this. What he said was, imagine somebody discovered a new island, maybe just off the coast of northern Queensland or somewhere, and a number of smart entrepreneurs decided to set up businesses there because land was cheap. No one really wanted to live there or work there. Over time, people wanted to move to the island because there were jobs available there. These new residents, they needed to build new houses. Now remember, it was just a small island, so after a few years, the island would be full and there'd be no room to build more houses. The island was now thriving and more people wanted to move there and live there. But there was no more land left and nowhere to build houses. So what could they do? With no vacant land left, they could only buy a piece of land that was already occupied. They'd have to pay people already living there for the privilege of moving to that island, and if there were lots of people wanting to move to the island, those willing to pay the highest price would get to live there. The more people that wanted to live on that island, the higher the cost of housing would be. That's what causes capital growth. In short, capital growth is highest in an area where there's strong demand for property and the land is scarce. Now, if you look at Melbourne, Sydney and Brisbane in particular, but in fact all our capital cities, you can instantly see why house prices grow faster there than they do in regional Australia. Now, if you think about it, Sydney's almost run out of land because of its geographic boundaries. In Melbourne, our perimeters are also set by planning boundaries, and recently they've changed the rules and they're not going to grow the planning boundaries. Now, while there's huge demand for properties in southeast Queensland, we also know there's quite a lot of land available for new housing there. But it's no longer cheap like it used to be, and when you think about it, most people want to live near Brisbane or near the water. So, having said that, much of the sought-after land there has already been taken. Now, one thing to remember about scarcity is most people want to live in the most desirable locations. In Melbourne, it's the inner and southeastern suburbs and near the water. In Sydney, the most desirable areas are on the eastern suburbs, the lower North Shore, and in the inner west, and some of those suburbs near the water. And in Brisbane, the tendency is again to live near the CBD or near the water. Now, a new property cycle started last year with the stimulus of the first homeowners boost. Now, I've heard Grattan Institute economist Sol Estlake describe this as a second or third home vendors boost. Because many of those first home buyers, they used that extra $7,000 or so to borrow another $30,000, $40,000 that they then handed over to the sellers who jacked up the price of their houses. Now armed with those bigger payouts, bigger than they expected, these vendors came back into the market as upgraders looking for homes in our more affluent suburbs. At the same time, as our economy was improving, it was the most desirable and most sought after suburbs that grew in value. They grew the most in value. These are usually the most affluent suburbs. That's what happens every other cycle. People living in these areas can usually afford to upgrade or improve their houses. These are the type of properties that have grown in value first at the beginning of previous cycles, and the same is happening this time round. Well, what happens to those people who can't afford to buy in these most desirable suburbs? They buy in the next most desirable suburb. This has also been well documented in previous cycles. Prices start to increase in the more affluent areas and the desirable areas, then people start to ripple into the adjoining suburbs outwards. Now, how can investors take advantage of this knowledge? Firstly, it's important for you to understand the big picture. Understand where we are in the general property cycle. Now, I explained this in last week's issue of Property Update. So if you go to the Property Update website, you can see my article on where we are and at which stage of the property cycle. Next, it's important for you to become an expert in those suburbs that are going to grow in value first. Get to know those areas so you can pick the great investment opportunities in those suburbs, those near the city, near the water, those most desirable suburbs. If you buy a good property in these areas, you're likely to achieve excellent capital growth in the next 5 years. So what's the right type of property? It's one bought below its intrinsic value in an area of proven strong capital growth and one to which you can add value. Over the next few years, the suburbs one ring further out are going to start to make good investment sense as well. And it's really only right near the end of the cycle that the outer suburbs, those that have traditionally been first homeowner areas, end up getting good capital growth. This spread of capital growth from the inner to the outer suburbs is called the ripple effect. And of course there's always going to be exceptions to this general rule. It's been said that property investment's a bit like a game of chess. We all have the same pieces on the board, but those who can think 3 or 4 steps ahead, they're the ones that are going to win. And that can't ring more true today than any time in the last 20 years. Positioning yourself to be where the new property wave is going to be, where it's going to create winners, is critical today, because during this new property cycle, the winners are going to win big, while others may be left on the sidelines. The surge in property prices is likely to be very specific in nature, not general. If you find yourself standing in the wrong spot, it may just pass you by. And we don't really want that to happen, do we? I'm going to be explaining my forecasts for the next property cycle and how you can take advantage of the new emerging trends at my Catch the Next Property Wave seminars. And these are the only round of public seminars I'm going to be conducting for at least the first half of this year. I'm going to be going into this in much more detail, and also the traps I see ahead, because this cycle is likely to be different to other property cycles. Because everything in the world is different, everything happening around us is difficult. The first seminar is in Brisbane, March 13th, and there's only a few places left, so if you're getting this before that date, please, and you're in Brisbane, please come and join us. And if not, just click on the link below so you can see when it is in your state, because I want to catch up with you there. Because if you want to ride the next property wave and take advantage of the opportunities the next property cycle will offer, and hopefully avoid some of the traps, please click on that link below and come to our seminars, where I'll be conducting them together with Rolf Schaefer, who's a fantastic finance strategist, and Ed Chan and Ken Race, who are of course property tax experts. Everyone's talking about the next property boom, and I'd really like you to make the most of it. So please join us at our Catch the Next Property Wave seminars. Click on the links below and join us in Brisbane, Melbourne, Sydney and Perth. And if in between times you want to keep up with my daily tweets about property, please follow me on Twitter by clicking the link below. I look forward to giving you your next property update in 2 weeks' time.